Hello friends. So far I have discussed with you about the fundamentals of partnership, meaning of partnership, that it is an association between two or more persons to carry on business, to share the profits and losses. I discussed about the partnership deed, that it is a legal document defining the partnership. I discussed about the importance of partnership deed and the Indian Partnership Act 1932, that if any issue is not addressed in the partnership deed, then that issue will be addressed according to the provisions of Indian Partnership Act 1932. Now, we have certain other provisions which are relevant from the partnership point of view. Now, one we have, it says that in case of an emergency, any of the partners has the right to act according to his best judgment. Act according to his best judgment. That means he can take a decision that he feels is right at that moment without the consent of other partners. Okay, so in case of an emergency, if the other partners are not approachable, suppose there are three partners X, Y and Z. There is an emergency in the firm and Y and Z are not approachable, so X has the power to act according to his best judgment, and in the process, say he incurs an expenditure of 50,000 from his own pocket. Okay, in the emergency, the X is acting according to his best judgment, and in the process he incurs an expenditure of 50,000. Then he has the right to ask this 50,000 to get this 50,000 back from the firm. That is, he has the right to be indemnified. What is the word? He has the right to be indemnified, that is, get back his 50,000. Okay, the provision says in case of emergency, a partner has the right to act according to his best judgment and be indemnified for the expenses incurred by him. Okay, so this is one thing. Now there are certain important rules laid down by the Indian Partnership Act. There are certain provisions of Indian Partnership Act that are really important in the absence of a partnership deed. Indian Partnership Act 1932. So there are certain provisions which are very important, which are laid down in Indian Partnership Act 1932, which are applicable in the absence of a partnership deed. I have already told you that if any issue is not addressed in the partnership deed, then that issue will be addressed according to the provisions of Indian Partnership Act 1932. Like I told you with an example of interest on loan advanced by a partner. Okay, now let's see what are the issues. These are very important issues. Please note these issues. Firstly, it says that if the partnership deed is silent, then the following provisions shall apply. Number one is all the profits or losses, okay, are to be shared equally. Okay, so what does it mean? That now suppose there are three partners, suppose there are two partners only, X and Y. Okay, so there is a profit of say 20,000 to the partnership firm, but the partnership deed is silent as to the ratio of profit distribution between X and Y. So as this issue is not addressed in the partnership deed, the provisions of Indian Partnership Act 1932 will apply. It says that all the profits or the losses are to be shared equally by the partners. That means X will get 10,000 and Y will get 10,000. Okay, so this was the first issue. Now next, the second one says that interest on capital is not paid, is not to be paid. Capital, you all be knowing, you have studied in class +1 what is capital. A money introduced by a partner into the business, and the business will be paying interest. Now if it is defined in the partnership deed that what interest is to be paid on capital, then the interest is to be paid at the specified rate in the partnership deed. But if the partnership deed is silent as to the interest on capital, then the provisions of Indian Partnership Act 1932 will apply, and it says that interest on capital is not to be paid. Similarly, if the interest on capital is not to be paid, on the similar lines it says that interest on partners' drawings is not to be charged. Okay, so what is drawings? You all must be knowing, any money withdrawn from the business by the partner for his personal use. Okay, and the firm will be charging interest on that money because the firm is losing interest on that money. So if the partnership deed is silent, the Partnership Act 1932 says that you can't charge interest on drawings. Okay, the next one is, I have already discussed in detail with you that interest on loan to be paid at the rate of 6%, that is specified 6%, that I have already discussed in detail with you. Next is that any kind of remuneration, will not be paid to partner. What do you mean by remuneration? It can be salary or commission to partner. If partnership deed is silent as to remuneration, the provisions of Indian Partnership Act 1932 will apply, and according to that, no remuneration will be paid to the partner. So in the nutshell, what we can say, what the provisions of Indian Partnership Act 1932 says, that profits and losses are to be shared equally. Okay, then interest on capital is not to be paid, interest on drawings is not to be charged, interest on loan must be given at the rate of 6%. Must be given, you can't ignore this thing. Then the next one is, any remuneration any kind of remuneration, whether it is salary, it is commission or whatever, nothing will be paid to the partner. You can't pay. Then if you are paying, then you are violating the provisions of Indian Partnership Act 1932, because the deed is silent as to its treatment. Because here the partnership deed is silent. So, in short, either of the two will speak. Either the partnership deed will rule or the Indian Partnership Act 1932 will rule. Okay. I'll take as example on this. Now I say there is a person X. I'll take an example now. There is a person X, partner. Okay. 3 partners X, Y, Z. Okay. Now the capitals are X has introduced 10,000, Y 8,000 and Z 7,000. Now X is saying that because I have introduced more capital than you, then I should be paid interest on capital at higher rate. Okay. He says that I should be paid interest on capital at the rate of 10%. Okay. In the very beginning, I am taking that partnership deed is silent. There are no issues in the partnership deed. Okay. Or I can say there is no partnership deed at all. Now, what will happen? X is saying that pay me interest on capital at the rate of 10%. Partnership deed is silent. Now, what will happen? Now, the partnership deed is silent. What will happen? The provisions of Indian Partnership Act 1932 will apply. And what the provisions of Indian Partnership Act 1932 says regarding interest on capital? That interest on capital is not to be paid. So, what will Y and Z do? They will get a copy of Indian Partnership Act 1932 and they will say, here, see the copy, you can't ask for interest on capital. Okay, what will happen? Indian Partnership Act will apply and accordingly no interest to be paid. No interest to be paid. Okay. Simple. Understand the logic behind everything. Logic or the provisions of the act. Similarly, if one of them ask for a salary, that I am devoting more time than you, then pay me salary. They can't pay you. Similarly, the Indian Partnership Act will apply. Okay. Now next, say for example, I'll taking the same example. Second case, say Y has advanced a loan. Y has advanced a loan of say 20,000 to the firm. Okay, partnership deed is silent. Provisions of Partnership Act will apply, and interest on loan will be paid. Interest on loan at the rate of 6%. That will Y will get interest on 20,000 at the rate of 6%. That comes to 1200. Okay. and if there are any profits in the firm, that will be shared equally. Suppose a firm earns a profit of say 30,000. So what will X, Y and Z will get? Because partnership deed is silent, Partnership Act will apply. Partnership Act says profits or the losses are to be shared equally. Therefore, X, Y, Z each will get 10,000. That is how the profits will be distributed. Okay, so in short, we can say that any of the issues in partnership will be addressed either by the partnership deed, okay, or the Indian Partnership Act. Because if we say if there is an issue which has not been addressed by both, there will be an absolute chaos among the partners. Okay, they can't reach any conclusion. So it is important that every issue is addressed either in the partnership deed, as per the agreement, as per the understanding between the partners, or if the partnership deed is silent, then as per the provisions of Indian Partnership Act 1932. These provisions are very, very, very important. You are definitely going to get the questions on that. So remember these provisions very, very carefully.